Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Palantir Technologies, why this AI elite growth compounder still looks attractive. This article was written by Dhiren Pichai. Summary. Palantir Technologies Inc. delivered Q4 results with 70% sales growth, robust margin expansion, and beat analyst estimates. PLTR guides for 60% revenue growth in 2026, expects U.S. commercial revenues to rise at least 115%, and projects strong free cash flow. Valuation approach now uses a conservative, growth-adjusted EV/EBITDA multiple, raising the price target from $183.84 to $228.91, implying 72% upside. Despite recent stock weakness, PLTR's high operating leverage, low capital intensity, and AI-driven growth reinforce its long-term investment appeal. I am Dhiren Pichai. Using my aerospace engineering expertise, I provide a data-driven approach to investing ideas in the growing aerospace, defense, and airline industry. I run the investing group, the Aerospace Forum. Palantir Technologies Inc., PLTR, the leading provider of artificial intelligence software for government and commercial customers, reported fourth quarter results that beat analyst estimates. As part of a broader market sell-off, particularly for AI stocks, Palantir Technologies stock has declined 17.4% since my last report. In this report, I discuss the company's most recent earnings and the outlook, and I update my price target. Palantir earnings are simply impressive. The growth story of Palantir Technologies remains impressive. Sales rose 70% in the fourth quarter to $1.41 billion, beating estimates by $65.4 million, or 4.9%. Earnings per share rose to 25 cents and were 2 cents ahead of expectations. Excluding strategic contracts, the revenue growth was even 72%. In the U.S., revenues grew 93% to $1.077 billion, with 137% growth to $507 million for commercial revenues and 66% growth to $570 million for U.S. government contracts. International contract revenues rose 22.5% to $331 million. Adjusted operating income increased 114% to $798 million, as margins increased from 45% last year to 57% this year. So, we continue to see that operating leverage is improving. As I previously noted, the cost profile to a large extent is decoupled from top-line growth, and that allows margins to increase substantially. Customer count increased 34% year-on-year, while commercial customer count rose 37%. Sequentially, customer count rose 5%. Net dollar retention was 139%. Net dollar retention is the recurring revenues from a customer cohort in the prior year plus contract upsells minus downsells and churn, divided by the recurring revenues from the cohort in the last year. It provides an indication of contract value expansions or contractions. So what we are seeing is that the company is not only increasing its customer count, but also expanding business with existing customers. Palantir Technologies guides for 60% growth. For the first quarter of 2026, Palantir Technologies is guiding for $1.532 to $1.536 billion in sales, marking 9% sequential growth and 73.5% year-on-year growth. Adjusted operating income is expected to be $870 to $872 million, indicating margins of 56.8%. For the full year, the company is guiding for $7.182 to $7.198 billion in revenues, marking 60% growth at the midpoint. U.S. commercial revenues are expected to increase at least 115% to $3.144 billion, while adjusted operating income is expected to be $4.126 to $4.142 billion, indicating operating margins of 57.5%. Free cash flow is expected to be between $3.925 billion and $4.125 billion. The opportunities and risks for Palantir Technologies. The opportunities and risks remain largely unchanged. There is a huge potential to inject AI solutions into the government and commercial end markets. Palantir Technologies is often viewed by investors as a major disruptor, which it is, and a replacement for the prime defense contractors. However, we note that while Palantir's CEO has been critical of the cost and efficiency of defense prime contractors, the company is actually teaming up with those contractors rather than replacing them. The company can potentially play a pivotal role in the Golden Dome project, providing an AI layer on top of the data fusion layer. At the same time, we note that international growth may be limited, in part due to the tone of the CEO's pro-America tone, which these days also comes with aversion to other countries. European companies, countries, and governments want to become more secure and optimized. That provides an opportunity for Palantir, unless a European counterpart of Palantir rises, which would fit in the objective for European security autonomy. On valuation, the stock is valued richly, and it is hard to properly value growth against a reasonable price. To that end, I have tweaked my valuation approach for Palantir, with valuation multiples being a function of revenue growth and EBIT and EBITDA margins. Palantir Technologies' price target increased. To determine multi-year price targets, the Aerospace Forum has developed a stock screener that uses a combination of analyst consensus on EBITDA, cash flows, and the most recent balance sheet data. Each quarter, we revisit those assumptions and update the stock price targets accordingly. In a separate blog, I have detailed our analysis methodology. For Palantir Technologies, I use an EV/EBITDA multiple for valuation based on expected revenue growth and EBITDA margins. I previously adopted a method that simply took the current EV/EBITDA and divided that figure by 2. The current setup is informed by expected growth rates that value the substantial growth more appropriately. So, as those growth rates change, our EV/EBITDA multiple also flexes with that. The EV/EBITDA that I currently use is 87.7x, which is the median EV/EBITDA derived from the figures from 2020 through 2034. It is lower than the 92.3x, which I used in my prior assessment and was based on the average. I believe taking a conservative approach towards the valuation provides a better way to value stocks. On many occasions, it allows us to demonstrate upside, even at a conservative multiple. The expectation is that Palantir will grow sales by nearly 40% annually through the end of the decade, with 44.4% annual growth in EBITDA and 32.4% growth in free cash flow, as I am implementing a cash conversion rate that decreases over the years. As a result, the indicated price target has increased from $183.84 to $228.91, providing 72% upside. The expected key metrics remain phenomenal. I am currently assuming that EBITDA margins will flatten out at roughly 63%. And even with reductions in the cash conversion ratio, it provides a low capital intensity business with extremely strong growth in free cash flow. That should also allow the company to grow its cash pile to over $34 billion by the end of the decade. I believe these forecasts also show why investors like Palantir Technologies so much. Conclusion: Palantir Technologies remains attractive. Palantir Technologies has been caught in a broader market sell-off since my last report. However, we note that profit-taking at times is healthy, and for Palantir, we are seeing that the performance expectations in the years ahead are even stronger than previously anticipated, driving an increase in the price target. I believe that if AI is leveraged correctly, the contributions that AI can provide to economic growth will be substantial. And I believe that ultimately, if Palantir Technologies continues to grow, the contributions to economic growth will be a key performance indicator for the company. This article was written by Dhiren Bikai.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.